Let's proceed to the next topic, which is journals and ledger. I will explain the function of journal and ledger. In accounting, records are made in two sets of book, which is journal, daily book, and ledger, the collection of a journal is detailed record of all the transactions done by a business. And why we need a specialized journal? It is to facilitate large volume of business transaction and to ease burden of recording transaction by one person. And the advantage of journal is disclose in one place the complete effect of a transaction, and it provides a chronological record of transaction, and also it helps to prevent or locate error because the debit and credit amount for each entry can be compared. Next, the type of journal. There are two types of journal, which is general journal and subsidiary or specialized journal, which is under the subsidiary journal, there is purchase journal, sales journals, cash receipt journals, cash disbursement journals, purchase return journals, sales return journal. Let's look at general journal first. The transaction other than the transaction recorded in cash receipt journal, cash payment journal, purchase journal, sales journals are recorded in this general journal. The following transaction is recorded in general journal: opening entry, closing entry, adjustment entry, rectification entry, transfer entry, and credit purchase and sales of asset. And also purchase journal. Purchase journal used for recording the credit purchase of merchandise. In purchase journal, transaction of merchandise purchase on credit for sales are recorded. Next, sales journal. Sales journals used for recording the credit sales of merchandise only. Cash of merchandise is recorded in the cash receipt journal. A credit sale of an asset is recorded in general. Next, cash receipt journal, used for recording all types of cash receipt. All kinds of cash receipt are recorded in this journal. The main source of cash receipt are two. It is cash from cash sale and cash from account receipt. Cash payment journal, used for recording various transactions relating to cash payment. Business concerns usually pay debt by checks. Payment by check is treated as a Next, purchase return journal. Purchase return journal is where purchase returns of credit purchase are recorded. In the case of isolation of purchase agreement or in the case of defective goods, the purchaser returns the good to seller. This is the format for purchase return journal. Sales return journal is where the credit sales return are recorded. The sales return journal is prepared from debit notes sent by the buyer with return goods. In reply, the seller sends a credit note, and the sales return recorded in this sales return journal. Next, let's look at ledger. Ledger is an account to record, categorize, and sort transactions for maintaining the balance of companies, each asset, liabilities, owner, equity, revenue, expenses account so that balance sheet and income statement can be properly prepared. In ledger, there are two types, which is general ledger and subsidiary ledger. Below the subsidiary ledger, there are purchase ledger and sales ledger. Advantage of ledger: preparation of trial balance, presenting final position, application of double entry system, determining result of each account, maintaining classified account indirect advantage, presenting statistical information, collecting information, and present final position. Let's look at general journal first. A general ledger is a grouping of perhaps hundreds of accounts that are used to sort and store information from a company's business transaction. The general ledger is organized as follows. 1. Balance sheet account. That means assets, liabilities, and equity. Second, income statement account, which is revenues, expenses, and gains. And loss. Next is subsidiary ledger. A subsidiary ledger contains the details to support a general ledger control account. Below the subsidiary ledger, as we know just now, sales ledger and purchase ledger. Sales ledger, a record of sales, and whether or not you have received the money and how much you are still owed. On the balance sheet, the total amount still owed to you by customer will usually be called trade debtors or account. Next is purchase ledger, where is the record of your purchases and expenses, whether or not you have paid them or how much you still owe. On a balance sheet, the total unpaid bills will usually called trade creditors or account payable. The purchase ledger has an account for every supplier, and this is the template for the purchase. And the last is the difference between journal and ledger. I take some of the points. First, journal. It is the storehouse for recording transaction, while ledger is the permanent and final book of account. It is termed as the means of classified transaction. The second difference is transactions are recorded in the journal in chronological orders of dates just after the occurrences, while ledger transactions are posted in the ledger in the classified from the form journal. The third, transactions are recorded in a journal without considering their nature of classification, while ledger transactions are recorded in the ledger in classified form under respective heads of account. In journal, explanation of entries of the transaction are shown, while ledger explanation of entries of transaction are not needed. That's all for journal